let us know and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi folks, Basil Chapman sitting in for Larry Pesavento and just filling in for this hour, and we're looking at the Dow up 62 points. It was much higher earlier on. It's kind of digesting big gains, recent gains, and I thought this is a really good time. Maybe we can go through some of the commodities and some of the different futures, but let's just do this right now. We're looking at the E-mini, and this is the 1 minute chart. Look, these patterns, let me just show you right here. I always look at three basic patterns: straight up, straight down, cup formation, arch formation, a mix of 1 and 2 or 1 and 3. And I also look at rectangles, the narrow rectangle and the large rectangle. In this particular instance, the lowercase h, if it takes out that left side low and it's only made two peaks, peak A and then maybe a peak B, and then fails, that would suggest that it could go quite a lot lower. It could even go 1-to-1 of the H pattern, the arch high, to the base down to make a cup formation, and vice versa. The green one is straight up, stalls, comes back down, goes retests that high. How it breaks that high is really important. This lowercase h can become an M pattern, lowercase m, as the arch formation forms a secondary one. So let's just see, how does that work in real life? Well, here it is. Here's the arch formation, goes to, in the Chapman wave methodology, I didn't mention this, I'll do this real quickly. Try to identify the lowest bar, count each successively higher peak, alphabetize them sequentially, A, B, C, D, E, F, G, but it's the fourth highest peak, peak D. Remember, this is not A to B equals C to D, has nothing to do with that. It's just labeling the higher peaks alphabetically. I could have called them 1, 2, 3, 4, 5, 6 when I was doing this. This was at the time when Prechter was discussing Elliott wave, and I didn't want any confusion at all, so I said I'll only call this A, B, C, D. It has nothing to do with Elliott wave, although over the years I've had a lot of people say to me, wow, your methodology is way easier than Elliott wave, but that's fine. What we're looking at is that fourth highest peak, fourth peak D, is where you go upgrade from a buy signal to a buy mode to the fourth highest peak. That's where other things can happen. Whoops, there we go. So from this bar in the 1 minute chart, around about 11:03 this morning, Eastern time, it goes peak A, peak B, peak C, peak D. Well, I like to put in different technical tools. I don't have to use them. It's the easiest thing in the world. You just put them when you need them, you need them. It's like your Sears and Roebuck toolbox. When you need it, you need it. If you don't need it, great. Well, what did this do? It went to the obligatory Chapman wave buy mode sequence of 4 higher peaks at least, went to a peak D, and then it started to come down. So I've drawn this in. This was during my show, and I'd drawn this in. I can't remember exactly where it was because it was 10 o'clock to 11 o'clock this morning. No, it was after my show. And here's your lowercase h that goes to an M pattern, takes out the left side low and can go quite a bit lower. It did. So it starts off at about 39.52 and it goes where? To the 39.70s at a peak D. Pulls back, and look at this. I did draw this in, and what I'd like to do is to take a particular moment in time, a price point, and say from that level, can I get an equal number? I call this bar symmetry. Could I get an equal number of bars to the upside to come back to the left side, and will it come back to retest this level? So what I do is I draw this in, and it comes back and it goes to 39.57. Just fails to get to the 39.52 level in the E-mini 1 minute chart, and then it rallies. And what does it do? It creates the arch pattern that says you can make a lowercase h that goes to a lowercase m, and it breaks down. And here's what I like to do. This is a Chapman Wave inside track propellant zone. If it goes under it, it becomes a repellent zone. And look how it went right to that corner of the left side, right side price time match. Took it out, and I like to keep trend lines going because you never know when they come in to focus. Well, this came into focus right here at about 39.42 or so. And then it goes arch formation and a second arch formation. Now, all you can do is you follow the line, and I drew a rectangle in saying that if it breaks above this peak B right here, then you've got to consider whatever the count is as continuing. Well, underneath, it went to a peak, another peak A right there. I call it a gray A because it's underneath the previous one, a gray B and a very quick C. And lo and behold, here it is at leg D, actually made a peak D, just under what? The 200-period moving average. That was incredible resistance. So we're anticipating that the 39.59 area is going to be very critical because that could turn out to be an area of resistance. All right, with that said, and remember, we always like to look at different time frames. Here's the 10-minute chart. What did I say? Peak D was really important. I haven't even followed up on this. But normally what I would do, and I've been just really busy, didn't have a chance, I would draw in from this side to the high, in this case peak D in the 10-minute chart, and I'd draw it to the right and say, is there any chance that in the next move down, we get symmetry with a number of bars from the low of 3 o'clock this morning, around about 3 o'clock, 3:30 actually, going to that peak D at about 8:30, can come down and test the low that was made at 3:20 this morning of 39.43.50 in this time frame. So this is green because it's going up. And none of this here is different to anything I've discussed, the three patterns, the arch formation, the cup formation, straight line moves. And I'm going to introduce you to something else in a moment. Well, lo and behold, it went to 39.42.50 exactly in a little bit in 5 sessions earlier, 5 10-minute bars in an hour earlier. But going from 3 o'clock this morning, that's pretty good, right? And now it's bouncing off it. Why? Because the MACD is starting to turn up. The histogram's improving. The MACD is one of the elements that's quite important. The pink 9-period moving average, which took you to a short position on the 10-minute chart around about 9:50 this morning at, what was that? That was at about right there, 39.77 is still pink, and we're at 39.56, having gone down to the 39.42.50 level. So you could get out at any point if you were short, but this is the pink 9-period moving average needs to cross the black 14-period moving average to confirm that the trend is changing. All right, I thought I'd just do a couple of those things, and now let's do what's really important here, which I know Larry likes to do a lot. So here we go. We're going to go continuous contract of week. Now, he doesn't look at continuous contracts. He usually has a December or whatever date it is. I'm just using this as a continuous contract. So I have drawn in. I actually found this just a few moments ago. I completely forgot about it. The Chapman Wave unconventional flat base restart going back to the 820s. I typed that in way back here in September, around about the 19th. I'll be back and we'll talk about that.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Yeah, I just need to go back here to this 1 minute chart. Remember, the obligation in the Chapman Wave methodology is to get you from a buy signal to a buy mag to at least a D. D, the fourth highest peak, is where other things can happen. Once again, we've got ourselves a D, and because it's underneath the key moving averages, I can now put a down arrow. That doesn't mean to say it can't go high. I'm just saying that's the technique right there. And we're waiting for the 9 to cross under the 14-period moving average to confirm that it's going to go down. We'll come back to that. So this is what I wanted to talk about. I completely forgot about this. When I said, you know what, if I'm going to be doing Larry's show, and I especially try to set aside that hour, I'm going to go through the commodities. So I'm going through the commodities, and I decided to open this up on a daily basis, and it's the wheat continuous contract. And I forgot that I should have put the date in, but I know that I spent quite some time on this, and I said it's going to be esoteric to many of you, but for those who do the Chapman Wave methodology, you'll know that we talk about the instant restart, but there's something that I call the flat base restart, and then there's the unconventional flat base restart, and all of these are just a variation, and I'll explain what it is. This got to a peak D on the 7th of September. This is wheat continuous contract. And the price in this, it's the numbers always change because it gets smoothed out as a continuous contract, but I've got it as 873.5. And then it pulled back sharply. And then within 3 bars, as the Chapman Wave instant restart says, after D, if within 3 bars, it goes above that peak D, consider that it could be an alternate count. Well, lo and behold, it goes to an E and an F, and it pulls back, and then it makes higher highs. And I said, if this makes higher highs above peak F, I'm going to call this a Chapman Wave unconventional flat base restart. And the reason is it keeps coming back. And if that's the case, I'm going to type in, and I did it at the time, Chapman Wave unconventional flat base restart going back to the 820s. So it went to the D. I know that the other day I spoke about it, but I never opened up the chart. It was like this on the daily chart. And I was reading it, and I was doing some things quite quickly. And I said, I think that the commodities are pulling back here. We've got the DBA, which is the DB Agricultural Fund, for a couple of years now. It had been doing well, but I think it's going to start pulling back. And if all these different instruments commodity instruments pull back and crude oil pulls back, that could really be a boost for the market. So it went to the peak D, and then I thought, oh my goodness, I should open this out. And I opened it out, and then I saw the typing that I put in here, pink, because this is always as a highlight, I always make it pink because it fits into the pink cautionary moment. And look what's happened. It traded down yesterday to 793 3/4. Today it's trading at 802. And I put in the left side, right side price time match. The first one came down and hit in the arch formation, and I completely forgot about it. It didn't show because the lettering was covering it up. And all of a sudden I'm looking out, and it says that by the 22nd of November, there should be a test of this particular low right here. Whoops, it was this low right here. And that is the 802 area. Well, we just did that. So I just wanted to say, so now wheat is in an area where either it's going to hold in the 800 to 798 area, this is a continuous contract, or it breaks down and it goes to the next level. I'm not going to type that in right now, but I'll do it, okay? And I'll say if it breaks down, and that's all you're doing here is you're doing potentials using a particular technique. In this case, it is the bar symmetry in wheat. So here we go, left side, right side. And then if I put it in, the pink will, where is it? Oh, that's it, yep, that's it. Pink remains. Oh, it doesn't go, it could go. Well, I'm not going to change the number of bars to the right. It should go a number of bars to the right so that by the end of November, December, the first week of December, it could touch this level here. But there are a couple of things first. I'm just showing you the technique. 746 would be the target. But at the same time, I'm going to draw in what could have been right here, what could be at this particular point. There we go. So when I look at that, using my Chapman Wave inside wedge target resistance line, in this case, target support line, it seems to me that that just doesn't make sense at all. So I'll go to the next peak of importance right there. This one looks way more important, and there it is. So here's the line. At any point, if wheat takes out 775, it's trading at 801 right now, be careful. You can give everything back going to the August low. It needs very quickly to find some support and not just pounce higher or bounce high. It needs to close above this candle high of the 15th, which is at 843. All right, enough with the end. The monthly chart peak G/C had a very sharp pullback, and the weekly chart shows you, I think it was, let me just go to the weekly chart right here, made a peak D. These aren't potent. Peak D back in March, was it? Yeah, March, the week of the 11th. All right, enough with that. Let's go on to the next one. We're looking at das wheat. We'll do soybeans. Soybean continuous contract made a peak D, and right here in the daily chart about 2.5, 3 weeks ago. And now what we're looking at is pulling it back. Okay, so the rectangle formation is really important. See how long it's been in this, basically a rectangle between about 1500 and as a base about 1370s or 60s. Just continuous, and it keeps trading, and it goes to peak D. I have to always change these. I do every single chart that you ever see of mine that has notation, that's hand charted, and if it gets, there's a split, or in this case, the price gets smoothed out because it's a continuous contract, I have to change the lettered notation. Look where this trough B is right here. Trough's on the downside. It should be down there. And this arrow at least is good. So what we've done is stayed in a rectangle formation. The rule of thumb is when it breaks the resistance and goes to a D or an E above, be careful, because if it takes out the halfway marker of the rectangle, there's a chance it's going to go all the way to the base. In this case, the base is the what? The 200-period moving average, which was incredible support for this back in July of last year, going into the July lows and August lows. So now what we're looking at is 1387 is key support in the soybean contract, but it is making its second arch formation, and that so far suggests that it could come down quite a bit. So that's the daily chart. There's not much to add, and the monthly chart has only gone to a peak C. At some point, I would even say, at some point in the next 3-4 months, there should be a leg D to the upside. Let's go to corn, as we say here in the Boston area, corn. Corn is trading at a peak C in the monthly chart. It did this left side, right side price time match that I had drawn in quite some time ago. The price gets changed. So this should be down here, and this one should be down here. And that said that by December of 2022, corn should retest the high that was made of August of 2012. In this case, it's 781 and a quarter, and it's trading at 667. That's a long way to go. I'll be back. Basil Chapman, sitting in for Larry Pesavento's hour. We'll be back. Dow's up 82, S&P's up 1. Right.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman sitting in for Larry Pesavento's hour. I just wanted to show you, here's the gold contract. And gold made a low back in the early part of the day. I think it was 9 o'clock. Was that yesterday? 9 is a 10-minute chart on the 17th. And today is the 18th. Yeah. So it rallies off this low at about 9 o'clock, and that is the continuous contract low of 1756.6. And then it starts this huge, I talk about a bowl formation when it's like a long flat, it's not a cup, it's a bowl, it's flat, but it really curves on the left side, curves on the right, sort of flat in the middle. Well, this is the exact opposite, like a dome. And it starts another peak, ABC, takes a while, and it goes to DE. an F at the 200-period moving average, and then it goes C and D at the moving average, and it goes an A minus. That was a really unusual. Just every once in a while, you get this flurry of activity that fails. It's like an Eiffel Tower. It goes straight up and straight down, and that's what happened with that extension at 450 on the 18th. 450 is 250. That's on the 18th. That's last night, I guess. Oh, yes, 10 to 5 this morning, Eastern time. And then it arches over, and it does a left side, right side price demand, takes 3 bars extra. This is a 10 minutes. So it's 30 minutes extra to take out the left side low, and 50 minutes extra altogether to take out the measure, the move that we had on the right side. It pulls back to the 17, what was the low today? 1751.4, I believe, on the continuous contract. Goes to peak A and B. What was I talking about? Straight line move that looks like a lowercase h. Then it makes the H pattern itself and retests the low. But so far, it hasn't taken out the left side low. So it's stalling here, but it's showing no support at all. So it's different to something like, I'm going to the E-mini, which tested the left side low in a shorter time period, and now has gone to a leg B and trying to get to the 10-minute chart, trying to get to the 200-period moving average of 39.63. We're trading at 39.60.50 right now. So that means that this has the potential now to become a cup formation. Now, I know that when I'm doing these, and I know that Larry, when he's seen the chart, says, I'm looking at this and I see my butterflies and Gartleys all over the show, and I agree. I mean, you can see that even in these charts right here. So I like to take the information, for instance, whether it's a volume or if it's whatever it is, whatever is being discussed, I like to use it as pertinent information that might or might not impact what I'm looking at. Just as I have these tools sitting here, look, the 200-period moving average, do I care about it? You bet I do right now. Did I care about it at 12:26 this afternoon, 26 minutes past 12, when the S&P was down at 39.42.50? No, because this was way up here at 39.65. But now it's important. Look, hugging the 200-period moving average is as important as any indicator that you could ever have. So, yep, there's a potential pattern right now, Gartley. But in the meantime, I'm looking at this as an alternate count, gray A underneath there, because there's no confirmation that's a brand new buy signal. And now the stochastic's at 90%. That's good. And that's saying that this could alternate. So I put an E/B, and the 9's over the 14. And that says, you know what? There's enough strength here that we could have a couple of pop-ups away from the 200-period moving average, but that 200 is like a magnet until this is trading at 39.63.75 to 39.64.50. Oh, quite a bit away. I have to consider there's a doji candle, 3 doji candles, tiny little candles with like a plus sign, and I'm considering that that's saying to me at this particular point, if you're long, then raise the stop and let it play out, because there's enough strength to go higher, but you've got to be careful here because it's stalling at the 200-period moving average. It's done that so many times before. Look, right at the 200-period moving average back at 11.25 today. All right, so I thought I'd show some of those. I'll show it live. And in the meantime, back at the ranch, what I want you to do is go back to the futures. So corn is saying it's near the highs, and that's one of those. That's in the monthly chart, but the daily and weekly are showing that the sell-off that is had since mid-October has to be considered quite important because it is a peak D under the previous high in the weekly chart. I always consider that to be just a warning to say it doesn't have enough strength yet. It'll develop the strength at any point. Trading at 667 right now, it could push into the 710 or 720 area. That'll be really positive. All right, another one is soybean. Soybean is part of the DBA, which is the Agricultural Fund. I did this the other day. I had a question about SGG. Was it SGG? Yes, and I said I'm going to discuss it. This is the Sugar Trust. I said I'm going to discuss it in terms of the continuous contract because they kind of match in many ways. Look at the cup formation in the monthly chart. And it's amazing how many times we've seen over the last year stocks get either to the top within $1 after weeks or months or even years. And then they pull back. 20.47 was the high back in February. Then it pulls back. And then was there somewhere around June, I think it was. April, it goes to 20.47, 2 points away from the previous high. And then what's happened in this last move up to peak C in the daily, leg D in the weekly chart, it went to 20.48. And that's C. And I said that it should go slightly higher for a peak D. And I did the left side, right side, the same discussion that we're having here in the E-mini I've had with the left side, right side price time match, this bar symmetry from 20.47 back in April. Pulls back, makes this deep bowl formation. I personally don't like deep dish pizza. I like the thin crust, but that's the way it is. And then it spikes to a leg C to the upside, goes to a peak C. Obligation is to try to get you to a D, and that says that it should pop above that for a leg D in the next couple of days. And then you've got to be a bit careful. But look at that. Isn't that incredible, that symmetry? Remember I spoke about the symmetry in, was it crude oil? I did so many of these. Yeah, in crude, no, it was. Yes, it was. I spoke about the symmetry going for, and all the notations changed because it got smoothed out. I have to redo these things all over again. But right here is the left side low of April the 11th at 81.96. And what does it do? From the midpoint right there at that peak E top at 121.46. Well, that's changed. That'll be 116.05. In the same number of bars, it took out the left side low on the right. So we're watching this, and now it's got this Chapman wave inside track propellant zone goes to peak A, then to B, and the inside track repellent zone C and D, and then it pulls back sharply and it's making the cup formation. That's crude oil. So crude oil is starting to be very weak. If crude oil takes out 75 support, there's a good chance it's going to retest the low of 74.73 made in the 26th of September. So those are charts. Did I do CC? CC, amigo. Oh, I've only done a little bit just to play catch up. So CC is cocoa, and cocoa has gone to a peak E. But look at this. If you had to draw a left side, right side price time match, I like to just draw it across. Well, of course, we'd be over here. I didn't know that it would go low if I was looking at this. And I said, well, if I had to draw it, left side, right side price time match, you usually like to take it to the low. But the low, in this case, was taking so long, I'd have to move it out a little bit. So I'd go to a particular candle. I'd choose this particular candle right here. Then I'd go click and see if it's going to be bar symmetry of potential. Click. And I also then draw left side, right side, inside wedge, target resistance.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so looking at this, remember I was looking at that, I said alternate count, but it could be an E, and that 200 period moving average is such strong resistance that we're going to see if it pulls back. Well, look at the timing of this. The bar that I use, this is your midpoint right there. That's what I'd say that I like to use if it's possible to get symmetry on the bar, the left side to the right side. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars to the upside. And I drew this in right here as a match, and it went right to the bar. Let's see if it's 11 bars on the right side. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and that should take you to the bar match. Now, does it or doesn't it? It doesn't matter. This is the homework that you got to do. It's easy enough. There's nothing. Yeah, I mean, look, just doing it, and here we go. So this is pink because on the right side coming down it's negative. And on the left side, going up, it is green, positive. So we'll see. Look, it's got another, this is the bar that says it should test the low of 39.49.75 made at 13.22, 122 this afternoon. There's the bar. Watch it, watch it, watch it, watch it. Does it get there? What's the price that I said it was? 39.49.75. We've so far gone to a low of 39.50.25. So we've just missed it so far, but this is the same bar. It's a 1 minute bar. But I come around the corner, turn around the corner, race the horse up. There's the first furlong. There's up. Hasn't made it yet. We've got another about how many seconds? Let me check over here. It says another 10 seconds or so. Yep, that's it. So it just missed it, but. Look at that. Isn't that amazing? It came within about 50 cents of the left side low. If I had something, a candle or something on the left, I would have been able to draw in Chapman Wave inside wedge target support level. I didn't have that, so I couldn't draw it in. I usually find something to do it because I do like to have the support level that it's looking at. All right, so here we go. Still red. Down 475, down 5, down 525, going once, going twice, yep, right through. Oh, I'm sorry, it was a minute late, 1 minute late in taking out that left side. So look, do I need the fib? Do I need the volume? Do I need Chapman Wave methodology and other techniques? No, I just needed the bar symmetry right here. 11 bars up, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars down. Sorry, it missed it. Now you start to look for the next support level. Well, it's the next trough on the left side, and that trough is at 39.49.00, and so far we've gone to 39.48.00. It hit it. So you go one step at a time. Now I can say, aha, I've got a visual here. I don't think it's going to, I'm not sure it's going to go. I have no idea. But I draw in the left side to the right side, right there, that trough. Now, I'm always trying to be a little conservative, and I say, gee, this is kind of aggressive. This is, that says buy. Ew, I don't think that could make it. that says buy within another 5 minutes, 1350. That's 5 minutes. It should test this low over here. So that's where I want to draw in a Chapman Wave inside wedge target support line to tell me how we're doing. So I'll take it over there. I'll draw to this particular corner of the rectangle. And remember, this rectangle here is green. And this one is green going up, pink going down. And it says, I don't know. So then I'm looking at it and I'm saying, well, it hit this support very nicely over here. So maybe this is the time it has a bounce. Wait a minute. The 9 is still very much under the 14-period moving averages. Now, Larry never uses moving averages. Everybody's got their technique. I don't have to use the moving averages until it gives me a signal. Well, the signal says it's still very negative, and to turn positive, it's going to require a lot of work. So short means stay short right here. And the MACD is very weak. The histogram, the vertical lines are still weak. It's flat, the stochastic at 9% flat. The unbalanced volume is retesting the left side low. So a lot's going on here that we can measure. So I thought I'd do some of these because it's part of the technique that I do in my show, the Tiger Technicians Hour. It's what I do for subscribers every day. And at the same time, it's what I've done here almost 20 years. So I thought I'm going to have a little fun in my shows lately to do this live, and we'll see just where it goes. So there's your first arch. Here's your bigger arch, and it's taking out the left side low, and the MACD is still very weak, and the stochastics at 10% still very weak. Can this have a bounce, and can that bounce last? Now, normally what I do is I say, this fits everything very nicely, but that wasn't it. You were expecting a huge amount of pulling back. So I would then say, okay, it's finding support. That's the level. The 39.51, 52 area is kind of what we want to watch for, because if it goes to 39.53, it won't get down here immediately. It's going to take quite a while. This is options expiration Friday. So volatility in the direction that it's taking can be very quick and very sharp. But not the 30 to 40 points we've been seeing over the last month. I mean, this is 39.61 to 39.48. Fabulous trade if you're looking at it as a trade intraday, but not the big one, not the really big one. You want the straight line trend is the one that you really want. So now we watch this. So if one was short, you stay short. You can put your stop on one of these trend lines here, and we'll watch it. We'll come back to this in a moment. Question came in about, where was it? Oh, could I do oil? Heating oil, HO. I don't think I've done that for a little while. Heating oil is HO. Oh, I have. Went to a peak F in the daily chart, F/B, but that very much looks like an F at this particular point because it's gone underneath the 9, has turned below the 14-period moving average, changing it to pink. That D, oh, look, the 9 moving average was green all the way through. So that should be here, the down arrow. And the target would be at 3.40. It's at 3.49 right now. If it takes out 3.39 as support, then expect a retest of this low right here. And here's the thing that I've seen. A number of charts have made this pattern. You see this, the joining. Larry looks at things and he says it's got the 135 look. I didn't know about that until I saw him using it. Well, it's something that I've used for years, but in a very different way. I draw in, look, this is a green line right here. Under it, I make this pink because it's called an inside track repellent zone until it becomes a propellant zone. So this is pink, and look how it hit it perfectly. I've always said, how does a market know to move diagonally and hit these levels perfectly? I can understand horizontal, 120. Okay, if it ever gets back to 120, watch out. But 120, then 124, then 126, and 128, I mean, that kind of diagonal line, how does it know to do that? Well, all I know is that when it hits it and it fails, you got to be really careful. But it's done that now. And look, if I had to draw this as a channel, look at that channel. It's taken it out. Even if it's with the inside track, look, it's taken it out. There you are. Whoops. There you are. Just took it out yesterday and again today. So that's saying some weaknesses coming into heating or short term, but that's it. I'll be back in a moment. Basil Chapman sitting in for Larry Pesavento's hour, showing you some of the techniques that I like to use, and we'll be back in a moment. Let me just check this as we're going out. Yep.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So as we're doing this now, what I'd said before is if it starts to extend to the right, I have no choice. We've run out of bars. So this is not working to the low that we made right here in the E-mini. So what I tend to do is then I go, this is artistic. Usually I want it mathematical, but if it's not, I have to use, I say artistic, it's not because there are particular candles that I choose. So then I choose to move the whole thing to the right and say, so far it hasn't shown me that it's got upside potential. I need to be careful here. So look how this Chapman Wave inside wedge target support line is held. 1, 2, 3, 4, 5, 7, 8, 9, 10, 11, 12, 13, 14 times it's held. It's getting ready for a bit of a bounce at any stage. If it doesn't bounce and the E-mini 1 minute chart goes under 34, I'm going to say 39.44, then that 39.42 level just becomes an immediate target. Oh, it's 39.43.50. Wow, we are so close. But it's still ready for, it's trying to bounce, but it hasn't been able to. So I just thought I'd do something live today. I'll show some of these techniques live because, I mean, at this particular point here, you have no idea what's coming up. You have plans and you have techniques that you can use, and that's what we'll be using. So far, the pink 9-period moving average is still way under the 14, showing there's a lot of weakness still. But if the pink crosses positive over the 14-period moving average, and this can go to 39.53, perhaps we have a late hour rally. Of course, you've got Dave White coming up to see what happens during that hour, and Dave has all these fantastic techniques that he uses. And then you have Tom O'Brien, Mr. Volume, and Mr. Goldie himself comes up. So it should be a great program. In the meantime, back at the ranch, I'm just going to say to you at this particular point, just to give you an overview of what I'm looking for subscribers to my opening call, we are still long and aggressively long the Dow from starting the day after the low. We're going to stay that way for the moment. We look to add back on pullbacks. I had natural gas here. Natural gas is struggling. It needs to get above this inside track repellent line and start to trade for a couple of days in the $6.83 level, and it needs to do it soon. Have a wonderful rest of the weekend, folks. I'll be back Monday. Check out my opening call. And of course, I've got many webinars there. Stay tuned for Dave White and other great programming. Have a great weekend.